That's why it's important to diversify globally, because when your S&P 500 or your American firms are doing badly, you would want your African firms, to do well, or your Asian firms to do well. Do you see what I mean? So you don't want to put all of your eggs in one basket.
Isn't there meant to be some sort of regulation on it's insider trading, right?
Yeah, insider trading.
Because I think Donald Trump shut the government recently at one point. Yeah. And that impacted the market. So, like you said, some people must have known what he was going to do and be able to benefit from it. So, as a FCA regulated gentleman, is that industry not meant to be regulated to the point where you can't do that?
Well, insider trading is not something that should be going on.
Okay.
But it does go on.
Yeah.
So it's like if you were the CEO of I don't know, Microsoft, for example, and I was your right hand man, and I found out that you're gonna merge with another firm, I could go and buy X amount of stock, but that's illegal. Like, you just can't do that, because that's, again, you're trying to play with the market for your own personal gain. That's insider trading, and that's something that's can be criminally. It's criminal. It can happen. Yeah, you can go to jail for things like that.
So, but they wouldn't be able to prove that though, necessarily.
They will try every single way to prove that you've tried to do some sort of insider trading, and given that you're the assistant of Microsoft, there's a lot that they can try and stick on you. So
I feel you. So bringing it back to like normal terms for normal people now. So what would be, I don't know if I say average. So what's an above average amount that someone should be invested or could be invested in? So like, let's say the average was £500 a month, for example. That's like whatever the normal person with a normal job could be investing monthly. What's above average? What would set you above the rest to the point where your investing horizon looks nice?
Well, being able to maximize your ISA within 1 month. There's a lot of footballers that are able to do that. So when I say footballers are obviously probably, you'd consider them high net worth clients, because they're making, even if you're making 20 grand a week playing under 21s or under 18s, or sitting on the bench, for example, at Chelsea, you're still making more than, the 1% within the country. So there's no way of saying, the average person would, invest on a monthly basis, but it's just invest as much as you can that makes you feel like, invest the money that you'd be willing to lose basically on a monthly basis. You don't want to invest too much, heavily invest, and then because your funds are invested. So if you wanted to withdraw your money, there can be complications depending on the type of asset that you've invested in. So ISAs, you're able to withdraw whenever you sort of want to, but if you're invested in, for example, an investment bonds, you're only allowed to take out X amount before you're taxed. So you need to think about, are you willing to pay tax when you're withdrawing your funds?
So you mentioned about risk tolerance as well. So like younger people have a larger tolerance for.
That's generalized. That's just me generalizing, because for example, you might have but you might just be a cautious person. For example, just in general, you tend to worry about losing money. You're not really excited about the potential gains, for example. So those type of categories those type of characteristics will categorize you as a cautious investor. But there's a range of things, and we cover that through something called an attitude to risk and capacity for loss question.
So is that how you would assess clients' risk tolerance?
Exactly.
And see how they will deal with like market volatility.
Yeah. So that's one of the benefits of working with a financial advisor, because let's say, for example, you've heard your friends talk about investing, or talk about, there's this thing called an ISA, let me put my money in an ISA. He told me to put my money in, I don't know, Microsoft, just because we've been speaking about Microsoft. You don't know anything about Microsoft or how, volatile the stock of Microsoft can be. So you've just listened to your friends, and it's not matching your risk appetite or risk tolerance. So when you sit down with a financial advisor, they sort of assess how much risk you're willing and able to take, and formulate a plan that's bespoke and tailored to your personal life. So your portfolio will probably not look the same as Chisel's portfolio, because you guys are completely different people with completely different financial circumstances. See?
Yeah, Chisel's rich. Right. So if we was looking at something that was typically low risk, so that might look like something like maybe investing into the S&P 500. Like, correct me if I'm wrong. So something like that potentially, or maybe like bonds, stuff like that, which are stand well over time. Is that right?
You're wrong.
Ooh,
S&P 500 is swaying probably more so towards an adventurous, high risk.
So what's low risk then?
You think?
Cash, because cash. If you put £500 under your bed in a year's time, it's probably still going to be there unless someone's come into your house and robbed your house or copied your key to open the door and knows where the cash is. Do you get what I'm trying to say?
Yeah.
So you put your cash in your wallet, the cash is still going to be in your wallet.
Oh.
That's a very cautious. That's nearly the most cautious or the most cautious type of asset class.
That wouldn't be investing though, would it?
That wouldn't be investing, but there are cash funds.
Okay.
There are funds that are tailored around cash. So if you're very cautious, for example, you'll have more a greater exposure to something called bonds as opposed to equities. Now, equities are just stocks and shares within companies. So shares within companies, for example. So we spoke about Microsoft. You can have shares in Apple. Those are equities. So the higher level of equities within a fund typically makes the fund more adventurous or more, volatile. Because, for example, if I don't know, you, the CEO of Apple, said Apple products are rubbish one day, or slipped up or said something.
Or like Elon Musk, when
exactly.
he tweets and
that's a good example. Elon Musk says something,
yeah.
Then next day, boom, the stock absolutely goes down, which is why it's an adventurous risk profile.
So bonds wise, what do you say? Like grab stuff like gold, silver. Would those be classified as bonds?
Gold. Yeah. So gold is it's just an asset, and it used to be backed by monetary value. So backed by pound or dollar or whatever. So that will always be relevant. Gold will always be a fundamental and asset class. But I'd say bonds are not like gold isn't a bond. Bonds are fixed interest assets. So for example, the UK government will issue bonds to investors, and it's basically you're buying debt from the government, and they're paying you interest as well. So you're buying, and they're just infinitely paying you. Well, not infinitely. There are some fixed term bonds, for example, that reach maturity, but they're basically paying you interest. So you've got that guaranteed level of interest that's coming through. Yeah. Whereas the price of Apple or the price of Microsoft isn't guaranteed because it can change. They bring out the new iPhone. No one likes the new iPhone. Everyone's saying whatever they want to say on X or on Instagram, and then the stock price of Apple goes down. You see what I mean? So that adds a bit more.
Do you think X right now affects the market a lot?
For sure.
Yeah.
For sure, because there's things out there. There's fake news. There's people saying things that aren't necessarily true. Yeah. And it's difficult. And I know X are having a hard time differentiating between what's truthful, what's real news, what's true news, and what's fake news. So for the average person who isn't financially savvy, they're not going to know what the difference is between the two, which is, is bad for the consumer, isn't it? Because they're going to buy a stock or something. They've heard about this stock that probably isn't, there's no actual research done into it, and then they've lost all their money. Again, that's why it's important to speak to a financial advisor that knows what they're doing.
Can you explain the importance of having a diverse portfolio?
Yeah. So it's good to diversify. So for example, you spoke to me about the S&P 500.
Yes, sir.
What do you know about the S&P 500?
I know it's I know the S&P 500. It's like a combination of, I think it's the world's biggest, or like doing well most businesses in like a single, the top 500. So is it the FTSE 100, FTSE 500, something like that? They're in there, and generally over the span of history and life, it returns about 8 to 10%.
Okay,
it's close-ish.
Sort of. So S&P 500 is the top 500 companies within America. Now, when you're talking about diversification, it's not just diversifying again amongst asset classes. So how we said equities, bonds, gold, art, work, Bitcoin, cryptocurrencies as well. They're not regulated, but cryptocurrencies as well. It's also important to diversify geographically as well. So S&P 500 is just invested in America. So let's say, for example, Trump says, I don't want to fund, there's business allowances, for example, is going down. then people aren't going to want to invest as much, as rigorously into American companies. So that's going to affect the S&P 500 as a whole. So that's why it's important to diversify globally, because when your S&P 500 or your American firms are doing badly, you would want your African firms, you know, to do well, or your Asian firms to do well. Do you see what I mean? So you don't want to put all of your eggs in one basket, because if the US market, or if Donald Trump imposes tariffs again, for example, there's going to be huge consequences to the funds that you have invested. So that's why it's important to diversify.